What do you do when you operate in a dying industry that has no hope of being restored to the glory days? You put a smile on your face, manage the losses as the ship sinks, and continue to collect whatever sort of paycheck you can muster while funds still exist in the bank. Which in simple terms is basically what Corus Entertainment is doing. Guys, we're talking earnings. We are talking Corus. Let's dive in. All right, let's start off with the high level. So Corus Entertainment last week released their first quarter 2025 financial results for the period ended November 30th, 2024. The results plainly painted a picture of an imploding legacy media corporation that is simply unable to compete in a digital world. This is media, folks, and unfortunately network television just doesn't command the viewership that it once did. We're all competing against cats flushing toilets and whatever video some kid captured on his phone. Corus seemingly captured the state of their industry well within the first few words of the news release they issued in connection with the release of the results. Consolidated revenue decreased 12% for the quarter. Consolidated segment profit decreased 30% for the quarter, with free cash flow of negative $10.1 million for the quarter. Co-CEO and CFO John Gosling attempted to stay positive, stating that results were in line with the previously provided outlook and that they are encouraged by the emerging strength of their product and audiences, which was in reference to a slight bump in market share in linear viewing and digital audience growth. But ultimately, Gosling closed out his commentary by saying that further cost reductions remain an integral part of their more comprehensive plan to right-size the business. And things didn't get much better from there. All right, so let's get into the results here. For the first quarter, revenue declined on a year-over-year basis, dropping from $370 million to $327 million. Losses were felt across both the television and radio segments, with revenue dropping 11% year-over-year in television, while radio saw declines of 14%. But the decline wasn't just in top-line revenue. Profit declined at an even quicker pace, falling 30% year-over-year, dropping from $121 million to $84 million. Television saw its profit decline 29% year-over-year, while radio tumbled 15%. Corporate also saw a decline here, falling 3%. Profit margins, as a result, fell from 33% to 26% in the first quarter, with margins in television sitting at 28%, while radio came in at 15%. Overall, net income attributable to shareholders crashed 64% on a year-over-year basis, going from $33 million in Q1 2024 to $11.9 million in Q1 of 2025, while earnings per share went from 16 cents to 6. Adjusted net income fell by a less dramatic 31%, going from $41 million to 28, with adjusted EPS falling from 20 cents per share to 14. Free cash flow saw the most dramatic decline, moving from a positive $23.7 million in the year-ago period to negative $10.1 million in Q1 of 2025, a 143% decline. And then there's the balance sheet. Honestly, we're not even sure the word disaster properly describes the state of things here. Put it this way, the balance sheet is on page 20 of their financial statements. Most Canadian issuers have it on page 3. As of November 30th, Corus had $88 million in cash and cash equivalents on the book, versus accounts payable and accrued liabilities of $511. Current assets sits at $429 million, while current liabilities are sitting at $538, meaning they have negative working capital of $110 million. Total assets sit at $1.5 billion, while total liabilities are at $1.9 billion, which includes $1.1 billion of long-term debt. Debt, which they've now had to increase the maximum total debt to cash flow ratio covenant on multiple times in the past year and a half. That ratio limit has jumped from 4.75 times in August to 7.25 times in January, to give you a better sense of the situation, which again means they're operating very much from a position of weakness. But it's not all doom and gloom. Corus in the fourth quarter was the only broadcaster in Canada that saw an improvement of their share of viewing within the fall schedule, as per numerous personal people meter, which is a sort of Nielsen for Canada. Total hours streamed across all streaming platforms, of which Corus has 3 for some reason, grew by 24%. And they had 11 of the top 20 most watched programs on Canadian television this fall on their global network, which is worth celebrating, even if the market is declining overall. Corus also launched 2 new lifestyle channels, Flavor Network and Home Network, which are intended to replace the loss of the Food Network and HGTV, which Corus very publicly lost to Rogers earlier this year as part of a Warner Brothers licensing deal. Those channels were launched on December 30th, a day before they officially saw several well-known channels leave their lineup. Okay, so let's wrap it up. Unfortunately, it looks like we're nearing the end of the line for Corus. While they may have seen some success this quarter in terms of viewership, honestly, it didn't really translate to the income statement. Revenue was down, margins were down, and cash flow was down. The only ones making any money here are the 9-to-5 employees and management. And quite frankly, that will be coming to an end with the company continuously shrinking their operations. The fact of the matter is that the debt profile here is just too much to overcome in the current media environment. And it's unlikely that things will get better at all given the decentralized nature of content consumption in the digital era. Corus is sort of a dinosaur of a different time when we used to sit down and watch linear television, meaning channels that just picked what we wanted to watch and we had to watch it at the time that they wanted us to watch it. Whereas now we have TikTok, we have YouTube, we have Facebook, we have Instagram, you name it. And we're sitting around watching content that is much cheaper to make, like this content you're watching right now. And it is basically killing linear television. And like a lot of industries, media is one that has definitely over-levered itself. I've had conversations with various executives at media companies, and they basically all tell me the same thing, that the industry is pretty much in a place where there's so many large media companies that have massive piles of debt that they can't service. And we're going to see some really strange consolidations here over the next year or so. All right, everybody, thanks for watching. If you are interested in Corus's stock and you have some thoughts, please drop them in the comment section. Also, if you enjoyed this video, please smash that like button, subscribe, ring that notification bell. All right, everybody, thank you for watching.